Welcome back to Profit Protection. Today we're diving into the mind of one of the world's most renowned value investors, Mohnish Pabrai. If you're looking to take your investing game to the next level, you won't want to miss this breakdown of the Mohnish Pabrai blueprint, his top 5 moves that helped him achieve a mind-blowing 1,204% return on his investments. But who exactly is Mohnish Pabrai, and why is he so respected in the investment world? For those who may not know, Pabrai is a brilliant value investor, deeply inspired by Warren Buffett and Charlie Munger. He's the founder of Pabrai Investment Funds, a hedge fund with a phenomenal track record. He's also known for his transparency, generosity, and perhaps most importantly, his ability to spot winning investments by using simple principles and sticking to them. Let's get straight to it. Here are Mohnish Pabrai's top 5 investing moves every serious investor should know. Move number 1, focus on simple, high-conviction bets. Pabrai's first rule is to keep things simple. He doesn't believe in overcomplicating the investment process, and he's famously known for saying, "Investing is simple, but not easy." Instead of spreading his funds thin across a large number of stocks, he focuses on a small, concentrated portfolio of high-conviction bets. Pabrai often holds only 5 to 10 stocks at a time, allocating significant portions of his portfolio to just a few companies. This level of concentration might sound risky to some, but here's the logic. When you focus on a smaller set of high-quality investments, you can dig deeper into each company, gaining a thorough understanding of its strengths, weaknesses, and growth potential. By keeping it simple, Pabrai not only avoids the stress of managing too many investments, but also amplifies his exposure to true winners. Think about it. If you're confident that a few companies are going to outperform in the long term, why would you dilute those gains by over-diversifying? For Pabrai, concentration equals conviction, and conviction leads to long-term gains. It's about quality over quantity. Move number 2, clone the best ideas. Pabrai isn't shy about his approach to cloning successful investors. He's transparent about his shameless cloning technique, where he takes ideas from other successful investors, particularly Warren Buffett and Charlie Munger, and adapts them to his own strategy. Cloning might sound simple, but it's a powerful tool that reduces the learning curve and helps bypass years of trial and error. Pabrai emphasizes that cloning doesn't mean blindly copying. It's about studying the strategies of successful investors, understanding their rationale, and applying those insights with caution. Pabrai dives deep into the investments made by other top investors, looking at 13F filings, shareholder letters, and public interviews to gain insights into what they're buying and why. By studying others' successes and failures, he increases his chances of getting it right. An example of his cloning in action is his investment in companies like Fiat Chrysler. When Pabrai noticed that other top investors were buying shares in this undervalued auto company, he dug deeper, agreed with their thesis, and invested. The result? He generated huge returns for his fund. Cloning isn't about a lack of originality, it's about learning from the best. Move number 3, follow the heads I win, tails I don't lose much approach. Pabrai's third key move is all about risk management. His famous phrase, heads I win, tails I don't lose much, is a reminder that every investment should have a strong margin of safety. This approach is grounded in finding companies that are mispriced by the market, companies with limited downside risk, but substantial upside potential. The key here is the margin of safety. Pabrai looks for situations where the stock price is well below its intrinsic value, providing a cushion in case things don't go as planned. When the downside is limited, Pabrai feels comfortable making larger bets, knowing he won't lose much if things go south. Take his investment in Rain Industries, an Indian chemical company. At the time, the stock was significantly undervalued, giving him a great margin of safety. Even though the company had risks, the price he bought it at gave him a massive cushion. If things went south, his losses would be minimal. But if things went well, the upside could be enormous, and it was. By following this approach, he achieved significant gains while controlling risk. Move number 4, ignore the noise and play the long game. Pabrai emphasizes the importance of patience and discipline. He's a firm believer in holding stocks for the long haul, and he's famously uninterested in short-term gains. In today's world, where every second headline is a new breaking news alert. This is no easy feat. Pabrai's patience is legendary. He often says that he's comfortable holding a stock for years if the fundamental thesis hasn't changed. This approach gives him an edge over other investors who panic at every minor dip. Market noise and daily price fluctuations don't faze him. He's always looking at the bigger picture. This long-term approach also allows Pabrai to take advantage of compounding. When you invest in a company and hold on to it through its growth cycles, you benefit from the compounding effect over time. Compounding, as both Pabrai and Buffett say, is one of the most powerful forces in investing, and the patience to allow it to work its magic is a valuable trait for any investor. Before I go to the last move, if you enjoyed this breakdown of Mohnish Pabrai's investment strategies, make sure to hit the like button and subscribe for more insights on the best minds in finance. Okay, so move number 5, stay humble and avoid ego. Pabrai's final move is a reflection of his personality. Despite his incredible success, he remains humble and avoids letting ego interfere with his investments. He often tells investors to stay wary of their biases and stay open to learning. Investing is a field where ego can be a major downfall. When you believe you're always right, you start to ignore facts that might contradict your opinion. Pabrai stresses humility, understanding that the market can always surprise you and that there's always more to learn. Pabrai himself has admitted to making mistakes and learning from them. One example is his investment in a real estate company that didn't pan out. Instead of justifying it or holding on, he analyzed his mistake, learned from it, and applied those lessons to his future investments. Staying humble, admitting mistakes, and learning from them helps Pabrai stay ahead in the long run. So what can you take away from the Mohnish Pabrai blueprint? This is my take. Focus on a few simple, high-conviction bets, learn from the best by cloning, embrace a heads I win, tails I don't lose much approach, ignore the noise, and keep your ego in check. These aren't just investment tactics. They're mindset shifts that can transform how you approach the market. By following these principles, you can simplify your investing strategy and potentially achieve the kind of success Pabrai has. Remember, investing doesn't have to be complicated. It just requires a disciplined approach and a clear focus on the fundamentals. Let us know in the comments which of Pabrai's strategies you're most excited to try. And remember, here on Profit Protection, we're all about protecting your profits and helping you grow your wealth. Thanks for watching, and we'll see you in the next video.